Good morning, party people! Guess what is going on today? No, it's not a Billie Eilish concert at my house, unfortunately. Although, I hope that someday will happen. It is a massive, massive short squeeze of an obscure stock from a company in Houston that only has 12 employees. Correct. Yes, you read that right. It is ticker symbol SNMP, Evolve Transition Infrastructure LP. It's, as I talk now, it's at $5.51. It's up over $5.45, 9,334%. I repeat, up over 9,334% just today. This has got to be a history-making percentage increase for a stock. So, I'm so excited I can barely catch my breath. So basically what happened is, this is the New York Stock Exchange American, which is sort of like the Coors Light or whatever of the New York Stock Exchange. So it's not like small caps or penny stocks, but it's kind of the, I don't want to be too negative, but the lesser stocks. So basically what happened was, this company back in June, it got delisted by the American Stock Exchange because the value was so, the share price value was so low. And it wound up on the over-the-counter exchange. And the value of the stock wound up sinking down pretty low, like down to between like 5 cents to 20 cents. And yeah, back in June, so we're gonna go back to June here. I can't even believe it, how low the price was. Supposedly it was at 5 cents either today or yesterday, and today it's just absolutely skyrocketing in value to the point that their market cap is now over $1 billion. It was like a small cap company, and small cap stocks were supposed to skyrocket today because all the investors are selling large cap tech stocks. So anyways, they got delisted by the American Stock Exchange, and then they did a reverse stock split for 1 for 30. So the amount of shares got reduced by a factor of 30. If you had 30 shares, you would suddenly have 1 share. And generally, investors don't look at that as like a good thing. But here's kind of the dealio. This is unprecedented in history. As far as I know, there has not been a stock that has skyrocketed more than 9,000% in a day. There was the VOLVO short squeeze from 2008, and that is supposedly the biggest short squeeze in modern history, where a stock price increased in only a day or a week massively. And let's see. Yeah, biggest short squeeze in history. 2008, Volkswagen. 1923, was Piggly Wiggly short squeeze. That I think was a grocery store. Um, so, and food, that probably won't happen again because of the profit margins for food are pretty low. But wow, yeah, yeah, I'm pretty sure this has Volkswagen beat. So we have a historic short squeeze in the largest stock increase of the modern era now, just today. Again, this is SNMP Stock, Evolved Transition Infrastructure LP. And they're a small company out of Texas that they're focused on the acquisition, development, and ownership of infrastructure critical to the transition of energy supply to lower carbon sources. So they own natural gas gathering systems, pipelines, and processing facilities in South Texas, and continue to pursue energy transition infrastructure opportunities. So they basically make fossil fuel more efficient, lower the carbon footprint, supposedly all good stuff. We don't know if they're really an ethical company or not. My guess is they're probably not. But if you're a stock investor, oh my god, wow. Just massive short squeeze. And, by now everyone knows I'm a big investor in DBGI stock. And DBGI, just last week, announced that NASDAQ approved an extension to September 6th and September 15th, I believe, respectively, to get their share price above $1. That's the September 6th deadline. And then their stock equity above $2.5 million. And that's the September 15th or 16th deadline. So by mid-September, DBGI is going to go either way up because it's going to stay on the NASDAQ, or it's going to get delisted and go to over-the-counter markets and go way down. But like we just saw with SNMP, if a stock gets delisted to over-the-counter and then gets relisted back to the NASDAQ for DBGI or SNMP, the American New York Stock Exchange, then it can suddenly skyrocket, and short sellers can jump on and artificially lower the price. See, what's happening is, SNMP, the true value is not like less than $1. The true value is not like between 10 cents to 50 cents. That had been artificially lowered by short sellers. And the true value is not where it's at right now, which is like $5.65. Obviously, a stock's true value doesn't go from like 50 cents to over $5 in a matter of like 3 hours. We're not even anywhere close to the trading day being over, and it's just freaking skyrocketed. So basically, it's interesting stuff, because what you want to do, obviously, is you want to buy when it's artificially lower than sell when it's artificially high. And the true value of SNMP is based on their financials. And let's look at their financials. And, their financials are really, really poor. Revenue, $6.37 million for this quarter, March 2023. Negative 57.8% change. The operating expense has increased by 15%. Not good. Don't want costs to increase. Net income is negative 22.22 million, so they're not making any money as a company. And the year-over-year change is negative 128%. Net profit margin is negative 348.70. That's negative 441% for the year. EBITDA, negative 438,000, which is negative 104%. So they're not making a dime, and their net income has significantly decreased. It was already negative in the last quarter, and it's trending even more downward. Their net income has gotten worse. Went from negative 10.82 million last quarter to negative 22 million this quarter. And you can see what's happened to the stock price of this company. It's now a historic short squeeze, up over 9,000% today. Again, up over 9,000%. Right now, as I speak, it went down a little bit from $5.65 to $5.51. But I mean, it's still it's an unbelievable increase. How do I explain this? I don't know. Is it corruption? Is it some good old boy in Houston made a phone call to Congress? Are they really offering that much value by lowering the carbon footprint of their business model? I'm sorry, I'm just I'm at a loss for words. It's just, wow. Imagine if you had owned stock in that company, though. And, this example illustrates that the same thing can happen with DBGI stock. And DBGI has positive financials, up over 48% revenue, up over 47% profit margin. They're supposed to be cash flow positive by October. Is this going to be the next Levi's? Who knows? But they do own multiple brands. They own 5 different brands. They're not going to go bankrupt. They're not going out of business. They have strong financials. Worst case scenario, they can just sell one of their brands and they could be cash flow positive right this instant. But strategically, they're not doing that, so they must be doing well and making good money on these brands. And they have a modern business model. And yet DBGI is at 57 cents. SNMP, the previous close, so like yesterday or whatever, was between 5 cents and 10 cents, kind of depending on what source you look at, because it's gone up so much that everything is kind of screwy now. But it opened today at 43 cents. So it's kind of at near the level that DBGI is. And then it kind of flatlined for the first couple hours of the morning. It kind of flatlined and was like, went from 43 cents to 55 cents. And then suddenly it went up to 70 cents. And DBGI could do another short squeeze, massive, up to, I'm going to say $2 to $3. And then in the next couple days, it could go to $3 to $4. My guess would probably be around December or January. But I mean, it illustrates that a company with extremely negative financials can suddenly have a short squeeze. So why can't a company with strong financials like DBGI have the same thing? And it's a small cap stock. So, those are really popular suddenly as large cap tech investors sell off and they're looking for the next big thing. Like Tupperware. Tupperware went way up. It's Tupperware. It's not exactly exciting or revolutionary, but DBGI is on the NASDAQ. It's a tech-ish apparel company. And how will this tech evolve? Will they use tech to develop a different kind of clothing, like smart clothing? Because now they're making all kinds of smart houses and smart appliances, so why not smart clothing? Will they make it more efficient? Will they have a process where they manufacture denim using computers in their manufacturing process to kind of, uh, you know, tell the machine exactly how much materials to use and how to process it the most efficient way in their denim so they can cut back on material costs. There's all kinds of tech opportunities in clothing that they could use. So it's going to be interesting, definitely, to see how this plays out. So again, if a stock like SNMP can just skyrocket today, and this is probably the mother of all short squeezes in the history in the modern history of stocks. If you don't look at the 1920s, and 1920s apparently was Piggly Wiggly stock. Maybe it'll come full circle. Maybe we'll have another grocery store or food industry stock it'll just suddenly skyrocket due to advances in technology. But it's interesting stuff. So definitely put DBGI on your watch list. I'd recommend buying maybe a couple thousand shares right now while it's still really cheap, and kind of waiting and seeing how it goes. And then maybe in August, maybe increasing your position, maybe going up to 5,000, 10,000, maybe more. And the low float on DBGI is going to be significant because, again, like I've said in prior videos, if only 20 to 30, let's just be conservative, let's just say 30 to 40 to 50 people each buy $10,000 to $20,000 worth of this stock. So 15 to 20,000 shares. All it would take is for those people to buy that stock and hold it, even just for a few months, and suddenly, even after a few weeks, you would start to see a big bump in price. And then by month, at the end of the first month and the end of the second month, it would basically cause a short squeeze, because now these short sellers, they're doing algorithmic shorting and using synthetics and all this weird stuff that I'm not really privy to. I'm just a retail trader sitting in my living room, so I'm not really privy to all that stuff that goes on. But obviously they've developed a computer model to screw over retail traders like myself. I'm sure they're laughing right now. I'm glad they're having fun at my expense, because it really sucks to be someone who earned a bunch of money, bought a stock, and then they deliberately drove the price of that stock down using a computer model, and it has nothing to do with the share price or the underlying financials of the company doesn't match the share price. But this other company that has really poor financials, that is involved in oil infrastructure, who knows if they're even an ethical company or not, or what value they really bring to society, has skyrocketed. Oh, wait, now it just went down to $4.06. So some of that run-up is gone. But it's still going to close just massively, massively up. That just shows how even if the worst fears about DBGI get realized and they get delisted and become an over-the-counter stock, what can happen is, they might get delisted for 2 or 3 months. SNMP was delisted from June until now, so only only a couple months. But their share price plummeted and was like 5 cents at one point, and then it was up to like 43 cents this morning. And it just kind of shows you how a stock the small value share price stocks can really, really skyrocket. All right. Thank you, and I hope you enjoyed the mother of all short squeezes, SNMP stock, and my info about DBGI. And again, I'm an investor in DBGI, so eventually I hope that more people take interest in it. All right, thank you.